Hey all, this is a quick economic update and forecast outlook, a mid-month one. There has been record inflation numbers, record up to the last like 39 years or something. So that's for probably the full lifetime of a lot of the people watching. We've never seen in our lifetime inflation numbers this high. And to be clear, when like we're talking about price inflation, not just inflation of the monetary supply. So the consumer price inflation by the official statistics is up like somewhere between 6 and 7% year over year, but in reality, it's a lot higher than that because the government is fudging the numbers. So it's actually 2 to 3 times that high, and we can see that in the gas prices, in in food prices, and in prices of really most things. If you look back a year or two ago, they're a lot higher. So the focus oftentimes is they just use the word inflation, and yet there is a distinction about inflation between the monetary supply inflation, which is just inflation, or price inflation. So what I am seeing and expecting is the same thing that I've been saying for many months now, which is that as the price inflation increases, because the fact that the inflation, the new money creation, is going primarily just to kind of like fix the plumbing in the system of the mortgage-backed securities and the treasuries, where if the Fed wasn't buying those treasuries and those mortgage-backed securities, we would have had a housing correction by now, and the interest rates would have already changed by now. And yet by continuing to inflate in those two areas, they've been able to maintain the status quo for a time. However, it's limited insofar as how long that can go on, because as the prices are increasing, the inflation of the money supply, it's not really reaching the average people. And so we're at this point now where I guess I was anticipating it a little more ahead of time, where I was thinking it would kind of peak in the fall, but the fall is just about over and we're getting into winter. And I can sense and I can see the pressure insofar as people, well, on many different levels. There's the economic level, and then there's the medical level, where there's all of these hospitals are at like capacity at this point. And the reason they're at capacity isn't because of the new flu strain, but it's because of the adverse reactions from the jabs that people are getting. And yet the media is pushing a narrative that's not aligned with reality. They're pushing a narrative that is going to exacerbate the the disease, the societal malady and destruction, just as the executive is doing the same thing. We've seen some good things out of the judicial recently, insofar as making just decisions in a way. However, it's too little, too late, because that's only one branch, and the executive is going full steam ahead, self destruction, and at some point the legislative they'll pass some more spending, but really, unless they do more helicopter money, which means just giving everybody more stimulus checks, we're still heading towards this pinch point where the market is going to sell off, and we see a lot of the billionaires and Musk front and center, Elon Musk, but also in the other tech companies, selling billions of dollars of their stock and basically getting ahead of. Now the big banks are forecasting that there will be somewhere between 3 and 8 rate hikes in the next year. So that means the rates will come up from somewhere between 1 and 2% next year. However, that's not catching up to the 6% inflation that they're talking about, 6+%. So, and they're trying to get to 2, so they're going to have to double that. And those rate hikes are just going to keep on coming into the next year as well. And the reality that the actual price inflation is worse than the CPI that they state is also foreshadowed in the producer price inflation, which is their official numbers is over 10%. So the cost for the producers to produce products by the official numbers is going up by already double digits. And if you look at the more accurate non-official numbers, again, it's going to be double or triple that. So that is a way to forecast how the price inflation is going to increase, the consumer price inflation, because the producers can't produce at a loss, so their increase in prices will have to be passed down to the consumer. It's just kind of it's foreshadowing it. So the CPI, the Consumer Price Index, is kind of a lagging indicator behind the Producer Price Index, which is the leading indicator. So what I expect is basically at some point in this winter that we're going to have a significant market sell-off, a kind of a point where there's kind of a reality check in a way, and that will most likely lead to, so there'll be a lot of prices coming down, and that will probably be a buying opportunity, because the next step for the government is that they're going to then pass more stimulus, as if the government needs to solve the problem, because they won't let the free market work itself out, because if it's likely to just keep cascading like dominoes, and like it was going to do in 2008 and 2009. So it's the same narrative that I have been saying. It's just that my timing has been off, and I kind of I use that for myself as kind of like a deadline. So to think of like, oh, at the end of the season, I got to be all ready. I got to have all this done and prepared for this potential negative at the end of the season. So if that timing's off, it's from my perspective, it's not a big problem, because it's catalyzed me to be productive through the whole season. And then now that it's in the winter time and I'm basically like hibernating and I have very low consumption, and I'm not just kind of relaxing, and it doesn't make much difference from my perspective whether that happens, that kind of market correction happens today, or if it happens in 3 months from now, because the actions I will take will be the same. Is that I'll basically take advantage of that buying opportunity, and just have a little bit of savings, and then I'll use that to buy the assets that I'm confident in at a discount, which is primarily Bitcoin Cash. And so as the see, what we're about to see most likely in the short term is, I think we're about to see the metals take off. And the reason for that, take off in price, basically. I mean, they're just metals, they're not going anywhere, but the price, I think, specifically of gold, but also of other precious metals like silver, I think we're about to see a very bullish kind of run for them, for the reason that a lot of these big banks are front running the interest rates and the market moves that they're anticipating. So they are already selling their financial assets and all of that sort of stuff, and they're most likely to position into things like gold and silver, because they anticipate the tumult coming, and so they wanna position themselves into something that's going to weather that storm well. And so I won't be buying any more metals. I'm comfortable with the metals position I have, and I won't be selling any more crypto. But I could potentially sell metals if it gets to a good enough price for me, and I'll potentially buy the cryptos if it gets to a good enough price for me. But otherwise, I'm just not really going to do much, and I'm pretty stable insofar as just having a little cash position for the necessities, and otherwise just having reserves in precious metals and Bitcoin Cash. I think that that wraps up this video. It's not really new information, but for someone who's new to listening to me talk about this, I suppose it could be new. but it's just reiterating the same thing. I'm not like jumping around from one position to another, like my timing's off a little bit, but I see the same thing playing out. And until and unless there's some big kind of market moves that will change that analysis, um, that's what I'll basically just be reiterating on the monthly videos. But for some reason, I just felt like right now it's like mid-month, and I just felt like doing this quick little update. And I hope you're all doing well. And just from the financial position, that's as much insight as I can provide, and maybe it'll help you to position yourself for all that. Oh, and then the last thing is real estate. So when the interest rates rise, and they're guaranteed to rise next year, at least a percentage point, and probably more, that causes the cost of financing all of this real estate, where a lot of people have lots of real estate and they finance it, and basically they buy it all on debt. But because the interest rate is low enough and they get a return that's higher than the interest rate, then that becomes profitable real estate. But as the interest rate goes up, and simultaneously as the price inflation is going up, so that the potential people who are paying the renters are going to be squeezed more and more for money. So it gets to the on both sides. It's basically going to create a correction in the real estate market. So for anyone who's either already in the real estate market, they will start front running that and probably start selling right away. And then for anyone who is thinking about getting into the real estate market, it's just be patient, because you're probably going to see a lot better prices in going forward. But the financing might not be as good. And so, yep, that's about all the insight I have to share with you. I hope it provides some sort of value for you. And that's all. Take care.